Welcome to Bears in Exile. Today is Thursday, June the 7th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XLF, XOI, and whatever else we happen to look at. Alright. Well, we had the huge day yesterday. Today was all over the place news-wise, and easy reasons to find why, or explain away why what happened today, the way it happened. But I don't know. I kind of get some of that, and some of it I don't necessarily agree with. But anyway, so where we go. Ending today with a inverse hammer at the top of a possible range. This isn't a big green candle, so we don't have confirmation about being above the 200-day moving average, which is what we were talking about last night, along with the need for confirmation because we finished our uptick target. So no confirmation on either one today. And plenty bad with today. Yeah, the Dow was up 46 points. It was not able to challenge the previous high yet. Still has a little ways to go. But at its highs, it was doing pretty darn good today. Finished below the major price consensus level. It did peak above it. So, yes, there are a few positive things about today. In addition to that, we have an uptick on the Dow with the 14-day RSI moving average. Extremely good sign. Today is the first day of that uptick. So how about that? It'll be fantastic if it can get all the way to the top, and it's way too early to know if that's going to happen at this point. If it were, then it's going to be a huge rally, but too early. Now, stochastics are on the way up, CCI is on the way up, RSI is on the way up, passing the 50, important level. Up on the MACD histogram, first day up. And starting a bullish cross, hopefully it'll complete, on the MACD itself. So just take it on the daily. This doesn't look so bad. Yeah, we have a possible reversal candle, blah, blah, blah. But overall, indicator-wise, this is a good-looking chart. Now for the bad news. So China does their rate cut. That was awesome. The rate cut doesn't go into effect until tomorrow. Hopefully they'll have a positive impact, but remains to be seen. And Bernanke got in front of Congress and didn't say anything. He could have juiced it however he wanted to, and instead he just sat on his thumbs. So it is what it is. And here we can see the failure before reaching the current ceiling, and beyond that it looks pretty darn bad. Stochastics on the way down, RSI on the way down, CCI on the way down, histogram on the way down, MACD curling to go down, 14-day RSI moving average high still pointing up. So yeah, this is setting up for further decline. 60-minute time frame. It is it's not attractive. It's just not. So, which isn't to say that the game is over or anything like that. When you break through the long-term moving average bar, it is normal and healthy. Break through it and come back, tag it, and if it's for real, then you bounce off of it. So, if that's going to be the case here, yeah, this will be painful. It's another 100 points down on the Dow, roundabout, before we would get a retest of the long-term moving averages and hopefully bounce off if it's going to go that far down. And I certainly hope that it doesn't break through it, but that is what it is. No scamming here. SPX, yeah, not as good as the Dow, ending down. Not even 1 point. How about that? That's not too shabby. But it is a possible reversal candle. It did peak through the major price consensus level. It did not challenge the current ceiling. This I find kind of interesting. It's almost came into contact with the long-term moving average bar, which is bearish. And this is one of the reasons why I think, beyond the news, that we had so many problems today. It raced higher, it tagged it, it backed away. It's supposed to do that when it comes into contact with long-term moving averages. And you'll see on some other charts that is much more pronounced than this. But 14-day RSI moving average still moving up, along with the stochastics, CCI, RSI, histogram, and MACD getting a bullish cross. The daily looks really, really nice. Really can't ask for too much better than this in the daily time frame. Which isn't to say it can't turn around, but this is a really nice setup. $60-minute time frame, I don't think there's any need to rehash. It's the same as the Dow. If we have to go back to the long-term moving averages for a retest, we're looking at just above 1305. 10 points to the downside. Yeah, that could be painful and unnerving. If we were to break that, big trouble. So something to watch out for. Secondary is all the same as the Dow. So that is what it is. And the VIX. Saying last night we had the bubble corrective move finish. Needed to see what it would do next. And look what it did. This is what I was getting at with SPX. It gapped way down, right into the teeth of the long-term moving average bar. Long-term moving average bar is supposed to push things out when they're coming from the wrong direction. And that's exactly what it did. It pushed it out. And it retraced some and all that. Closed below the major price consensus level for the new month. Good sign for the bulls. But it did peak above it. So definitely not perfect. We have a great setup in the daily time frame for the VIX. 14-day RSI moving average rolling over. Stochastics on the way down, CCI on the way down, RSI on the way down, histogram on the way down, and MACD with a full bearish cross. This is a great looking chart for the market bulls. And now it's all about wearing out the long-term moving averages, collapse them, and break through them. So, gap down into them. Yes, there should be heavy resistance against that. So, while this is a possible reversal candle, I think it's understandable. Now, 60-minute time frame, just like the inverse as it should be of the Dow and SPX. Yeah, we have some bad things for the market bulls. Histogram sloping up, MACD looking for a cross, up on the RSI, up on the CCI, up on the stochastics, 14-day RSI moving average still pointing down. Definitely more good in the aspect that this should be going up in the 60-minute time frame rather than down. So, yep, there can be some more pain tomorrow. Comp Q, the NASDAQ, worse than the Dow, worse than SPX, and much more pronounced about what I'm talking about with the long-term moving average. It almost touched it today. I mean, it came really close. Tomorrow it's going to travel down some more, and it'll run through this. So, yeah, going right up from the get-go, right to resistance, and backed away the whole day. Closing below the major price consensus level, but it did at least try a retest of the previous high. Could be good, could be bad. Some people could see that, say, oh, this is a double top, and want to sell into it. Evidently, maybe that's part of this as well. But indicator-wise, still looks really, really good. 14-day up, stochastics up, CCI up, RSI up, histogram up, MACD up, completing a bullish cross. could look so much worse than this, even though this looks really darn terrible when you look at the candle. 60-minute time frame. Yep, same as the Dow, same as SPX. No need to rehash. Much closer to the long-term moving averages in the 60-minute time frame. Hopefully we will bounce off of them or reverse before getting to them, but indicator-wise, it seems more likely that it will have to retest them. If they break through, bad news. And TNA, small caps. This was really, really bad. Been expecting a retest of the 200-day moving average. Gapped right through it. And right into the teeth of the long-term moving average bar. Really a double whammy. You should push through the 200-day moving average. You should not gap through it. And so 2 strikes against it. And then Benny being an idiot, down it goes. Closing below the major price consensus level. But good setup with the indicators. 14-day ticking up, stochastics up, CCI up, RSI up, histogram up, MACD completing a bullish cross. And there's no need to rehash the 60-minute. It's the same as the Dow, same as SPX. Alright. XOI. Looked really good at the start of the day, but it gapped up almost to the long-term moving averages. Took a look and said, not for me, not today, and backed away. Now, one really, really good thing about oil, and when oil is bullish, the market is bullish, we peaked above and broke these ceilings. That's a good sign. Didn't close above them, not by any stretch of the imagination, but took a look above. That is a very good sign. Not a pretty candle, but that is what it is. And closed above the major price consensus level. Also a good sign. Indicator-wise, 14-day RSI moving average up, stochastics up, CCI up, RSI up, histogram up, MACD up. Beautiful in the daily time frame. So all is not lost, even though it certainly feels that way when you're watching the market crap out the way that it did in a pretty impressive fashion, considering where it was at its highs. UUP. We resolved the downtick target yesterday. Following the rules, we had to see where it would be going, see if it would confirm. Gap down, ran up the whole day. Thank you, Bernanke. And we really don't have a confirmation here either. I mean, it's not even really a fat body spinning top. It is just a fat candle. We have the 14-day RSI moving average going sideways. Not down yet, unfortunately. We have the stochastics going down, CCI down, RSI, a slight tick up. Completing a bullish, bearish cross on the MACD, down on the MACD histogram. I really don't like that RSI ticking up, but it is what it is. Overall, definitely bearish, but we have no confirmation. Should be noted that after hours, dollar started going down again until Japan opened, and then the euro fell like a rock and the dollar went up. So at this moment in time, no good read on what tomorrow will be like with the dollar. I hope that it's not up, but we shall see. 60-minute time frame, why not? This is important. You can see that we've broken through the long-term moving average bar that was bullish. It would appear that we're trying to go up for a retest of long-term moving averages that would take it back up to just shy of 2280. 14-day RSI moving average moving down, stochastics up, CCI up, RSI up, histogram sloping up, MACD ticking up, looking for a bullish cross. So could there be more upside to the dollar tomorrow? Yes, absolutely there could be. FXE, the euro. We had the uptick target resolved yesterday. Had to get confirmation. No confirmation. Still below the major price consensus level. 14-day RSI moving average ticking up. Stochastics up. CCI up. RSI sideways. Not as bad as down. Up on the MACD histogram. Up on the MACD. Definitely bullish in the daily time frame. No confirmation. GE trying to get a better read on the Dow. Yeah, gapped way up right into the teeth of what exists of long-term moving averages, and peaked above the major price consensus level. Ended with a spinning top. At least its positioning is pretty good since we're looking for confirmation, but it's not a candle that confirms. So tomorrow will be important. 14-day RSI moving average ticking up. Is this the first day tick up? Yes, it is. Yes, it is. Stochastics up, CCI up, RSI up, histogram up, MACD up. We do not have the start of a bullish cross yet, so not as strong as many other things. And Apple. This chart actually looks pretty good to me. Yeah, it's a big red candle. It closed right at the major price consensus level, which is what it did yesterday. This time coming from the top instead of coming from the bottom. Middle Bollinger Band is still below everything. That's good. 14-day RSI moving average moving up. Stochastics up, CCI up, RSI up, histogram up, MACD up slightly, but not bad. Still closing above the long-term moving averages. 60-minute, since this one looks so different in the daily, doesn't look that different in the 60-minute. Very similar to the Dow and SPX. Up on the 14-day, down on the stochastics, down on the CCI, down on the RSI, down on the histogram, and even the MACD ticking down looking for a bearish cross. This one is so close to its long-term moving averages, though. I mean, $1.75 essentially. I really hope it can hold it. I think it can hold it, but we won't know until tomorrow. And beyond that, possible head and shoulders. Now that would be horrible. That would really put a kicking to the market, and it does fit the pattern nice. Well, we will see. Very odd angle though. Anyways, random musings. GLD. We missed this one last night. And, yeah, we wouldn't have caught anything anyway. Didn't have a downtick until today. Downtick was resolved intraday. Now we need to see what it wants to do. Failing pretty bad here at the long-term moving averages, closing below them. It has taken some damage. Middle Bollinger Band is still below everything, at least there's that. 14-day RSI moving average marching on up. Stochastics turning, CCI turning, RSI turning, histogram turning, and MACD going sideways. Ooh, that's a lot of damage. That's a lot of damage. SLV. Yep, we wouldn't have really seen anything yesterday either, except spinning top inside of the long-term moving average bar. No downtick until today. Downtick resolved intraday. Still above the major price consensus level, but just like gold, the indicators pretty much all turning over with the exception of the 14-day RSI moving average. Lots of damage. Oof. And XLF, the financials. Going pretty close to the, no, It got right to the previous ceiling and backed away. Fat body spinning top, closing below the major price consensus level. Not a good sign. 14-day RSI moving average moving up, stochastics up, CCI up, RSI up, histogram up, MACD completing a bullish cross. So definitely not the end of the world. Been much better if it had closed higher and had a better odds of success against the recent high. We do not have confirmation of the direction after completing the bubble corrective move. We do not have confirmation after the break of the 200-day moving average. So not that helpful. Should be noted as well that Sticky and Bernanke wants the Basel 2 or 3 or 5 or 20 or whatever it is, forcing the banks to have more reserves, and that's not a good thing for them. And here we are with JP Morgan. You can see that reflected as well, like you did in XLF. Did not get to its previous high, closed below the major price consensus level, but it did resolve the uptick target today. 14-day RSI moving average ticking up. It's the first uptick today. Stochastics up, CCI up, RSI up, histogram up, MACD up. Indicators wise, this is a beautiful setup in the daily time frame, ruined by a crappy candle and also with a crappy 60-minute, just like almost actually just like all the charts. So there it is. So I wouldn't be expecting too much out of tomorrow. I hope that I'm wrong and it just shoots off. We'll see what the rate cut in China does once it takes effect. Hopefully there'll be some good news out of Europe, in which case today's ugliness will be moot, and hopefully there's not bad news, in which case it could confirm this stinking reversal candle and give us some negative movement back through the 200-day on so many things. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.